Hello traders, Gary Wagner here, just about 1:30 in Honolulu, 6:30 in New York. It is Monday, January 22nd, 2018, and this is the Daily Report for Gold and Silver. It does appear as though the government will avert a shutdown by once again kicking the can down the road. Stock market, though, little action in terms of a reaction to the news as it moves to new record highs. Gold up $1. Silver up a cent, gold closing at $1332.90, silver closing just at about $17. We did get some downside action in the dollar, down 0.2% at 90.14, but the major indices, Dow, S&P, and NASDAQ all closing at new record highs, with the Dow at 26,214, and the slide in Bitcoin continues, now trading around 10,620 CBOE and 10,255 in the CME. Well, traders, it seems as though the U.S. government is back in business, averting a shutdown by apparently voting some sort of stopgap legislation that will effectively keep the government running for the next 3 weeks. In other words, once again, we see that our politicians are simply kicking the can down the road. The net effect that we have seen on U.S. equities as well as gold has been interesting. Equities once again closed at all-time record highs. We'll take a look at a couple of charts in a second. And gold, which had been trading fractionally lower for the better part of the day, is now trading up $1.30, 0.1% at $1334.40. One thing that I can say when we take a look at this current chart, and the current chart that we are looking at is simply a candlestick chart in daily format, is that there are a couple of key areas by looking at two different fib retracements. And the first retracement that we're looking at goes from 1203 up to 1363, and that is the record top that we hit last year. And it also is my current point in which I believe gold will trade to over the next, say, 30 to 45 days. The next particular fib is simply looking at this rally, which began at 1238 and concludes at the current high of this rally, which happens to be 1345. And when we do that, there's two things we want to do with that. First, we want to look to see if there's any harmonics. In other words, different fib retracements coming to the same area or conclusion. And 1238 seems to be a major one because you have a 78% retracement from the long retracement right in here, which matches up exactly to the bottom or starting point of the current rally that we're on, because that rally, of course, started at 1238. From there, we see that they begin to kind of separate. We have this harmonics in which you have a 61% retracement at 1264 and then a 78% retracement at 1261. It widens just a little bit right here, 50% retracement at 1291 and a 50% retracement at 1283, and so on. But you can see that some of them are rather close, and to me are determining some real key areas in the market to look at for resistance and support. Now, the one that stands out the most right now with me is 1300, because you have a very strong harmonics. They basically match in that they are both 38% retracements, even though the price scale is completely and utterly different in terms of the range. It tells me that this current rally fits into this last rally quite nicely. The next real level that we want to look at is this 23%, and that comes in at 1326. And the interesting thing about that is, although it is widened a little bit because the 23% retracement here comes in at 1320, it tells us that both of these numbers are pretty important. And what it is really revealing to me is that we have solid support at this particular level. It is a key number in gold. Now, as I said, gold is currently trading slightly higher. Once again, we have a consolidating market with the doji forming, considering that out of the last 6 trading days, now 4 of them have been composed of dojis, the other 2 being green candles. When a market has this many dojis, tells me there is quite a split in consensus amongst whether or not we're looking at a short-term top or we are going to carry higher. My current sense is that if we take a look at how this rally is formed, in other words, it came up, it moved up a distance, it consolidated or formed a base at about 1320. It then spiked up yet from 1320 to 45, so that's another $25. My sense is that we are once again building a base or consolidating off this price point, and that we will see this market shoot higher. I think the market has the ability to definitely take out or at least challenge that particular price point. Therefore, my recommendation is to maintain our current long position in gold and to maintain our current stop, which is sitting right now at 1320. It doesn't really make any sense to move it up much higher, considering that the lows today were around 28 and we've seen lows come in at around 26. To move it any tighter, I believe, would be moving it up too high, just in case we're correct and this market does form a base and move to higher ground. And traders, next, I do want to look at silver. Silver today closed down nominally, closing down about 2 cents and trading above 17 at 1701. What is interesting to me about silver is the sideways trading action that we're seeing in the market that I believe is very similar to sideways actions we have seen in the past. In this case, between August and September, we had the market trade sideways before returning to the prevalent trend. I still see some pretty decent support at 17, but I also see some real resistance at 1725. Unless the market can break on a closing basis above 1725, I am remaining neutral to bearish in terms of my calls on silver. And traders, we are looking at a dollar chart. The dollar is currently trading lower on the day, down about 0.2% at 90.18. And the interesting thing is whether or not we see some solid support continue to be exhibited at 90. As you know, on Friday I talked about the fact that we broke through a major level of support in the dollar index. But if you look at recent activity right in here, you can see that the lows pretty much match up with the area of 90. But I still believe that there is some real potential that we will see this market trade as low as 89, and it is not until that point when we will see some real major support in the market. Because consider this is 90. When we go across, you can see that there's really no level on a technical basis that we can look for. We breached all of those points, first at 92 and then here at about 91. And the next real level that is possible comes in from this top right in here, which is 89, and maybe these tops right in here that come in at 86. In other words, I still believe there is more room on the downside for the dollar, which of course would be extremely bullish for the precious metals because they are paired or traded against dollars here. And traders, U.S. equities continue to climb, continue to move to new record territory. We can absolutely see this on this daily chart, this being today's activity, when we look at where the Dow Jones Industrial Average closed at, which was 26,214 and change. That is, in fact, a new record high. The same holds true for the Standard & Poor's. We'll bring that chart up. This again is a daily chart. It is clear that we have closed at yet a new all-time record high, and that as well as the NASDAQ, which as you can clearly see is also trading at an all-time record high. Again, a daily chart, NASDAQ up 71 points at 74.08. All things being equal, I expect U.S. equities to continue to track higher and continue to move and create new all-time record closing highs. And traders, lastly, I do want to take a look at Bitcoin futures, this being the March contract of the CBOE single Bitcoin futures contract. Market trades again under pressure now. The lows that were hit last week, which came in at around 9,000, we can see that it closed down substantially, considering that the high was up around 12,000 per Bitcoin, and yet it closed well below 11,000 at 10,150. If the market continues under pressure, which at this point I believe that it most likely will, let's see if it finds any support at these recent lows or at 9,000, because if it cannot, traders, it is headed lower, and where it's headed could be as low as maybe 6 or 8,000. It is a scenario in which this new item is really trying to find solid footing and find the price that it is supposed to be at, and that is going to take time as traders work through these price volatility swings that we have seen. But recently, there is absolutely no question of a doubt the direction of cryptocurrencies has been towards lower pricing. Traders, it has been interesting action, not only watching what went on over the weekend, but what happened on Friday as well as today. It now appears as though the vote will pass and we will once again have averted a government shutdown, but only for 3 weeks. What's going to happen in 3 weeks? In other words, we've not answered the major questions and the major problems, which is fiscal prudence, that seems to come up every time we have a government shutdown. Most importantly, how will that affect gold? And my sense is it will affect the dollar in a very negative way and therefore be bullish for gold longer term. Therefore, I am expecting the precious yellow metal to move up over time. We know that we have a current trade in place, and I believe that there is more upside ahead. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye.